FUD out, push out the remaining buyer, or I would say the remaining individuals, all right, that are in position. That's the liquidation heat map. So get those people out of the market and then really see that move to the upside. So pay attention to that. Now, does that happen? Does it have to happen? No. But I would say, like, you should be marking that on your chart somewhere around 58.8 or so. I would mark that, just because if the price were to come down here, you got all these passive orders, you could see at least a price reaction. And if you got the CVD and the open interest still driving to the upside, that means the market is fitting the narrative. All right, it's staying with your bias a little bit there. So keep your eyes on that area, no doubt about it. Here we go. Let's go over to the chart real quick. Again, going to be kind of a quickie today, but I thought it was important to get an update out there for you guys. I did post this in the Discord as well. But a key level that I'm looking at right now is around 61 to 62K. I've kind of already mentioned it. Why am I looking at that level? Well, there is a multitude of reasons, okay? One, you have volume. Two, you have the 0.382 Fibonacci retracement level from high to low here. That is actually for continuation, though. So if you were actually looking to short this thing, this is where your interest should be getting perked a little bit. Why? You got liquidity there. See that push up, get that wick into that zone, take out that liquidity, and now you have technicals looking there as well, or kind of aligning there as well. You have the moving average working its way down. You have the trend line. You have a bearish trend line here working its way down, and it's all working towards where the weekly pivot is right now, along with volume. And then just above it, you got another gap, right? You got a gap and then volume, and then look, you got the previous value area low, which was support and resistance. So you have two levels of resistance that you really need to pay attention to. Now, that being said, all right, that being said, yes, I say pay attention to the short, but the thing that doesn't give me that comfort factor with saying, let's just go ham on a short right now, is you come back and you look, passive orders starting to build. Now, this morning, there wasn't much in terms of passive orders. It was pretty dark, to be realsies with you. So I think people are starting to get a little bit smarter on looking at that level around 61 to 62K, but there was nothing up here to really write home about. Now that there's starting to be some passive orders, that could help the narrative a little bit in terms of short, but you got to see a reversal in CVD and open interest. That is these two right here, okay? You want to see a reversal. You want to see CVD start to work its way down. Now, open interest, you may start to see that work its way down initially. As you start to approach that level where you see those passive orders right here, you'll probably initially see that start to go down, but then once you actually see the rejection and the price action then starts to work its way down, you're actually likely to see open interest go up, all right? It's a nuance, but you got to understand it. Okay, so coming back to the charts, is a short in play here? I say it is in play right now. So simply mark your charts, okay? When the price comes up here, evaluate. What does it do? Now, the one thing that you really, really want to pay attention to is a big buy